And back to the local market now, and what was another day in yo-yo land. Earlier I spoke to Ken Howard from RBS Morgans in Brisbane. Well, Ken Howard, a strong rally first and then a little bit of a lull before investors seem to pick themselves up again. The market seems to be a little bit wary.
Yeah, look, it feels a bit like deja vu. As you said, it was a strong start, and then about 11 o'clock it all started to turn back down, a bit like yesterday. But also like yesterday, there was a strong correlation between the movements in the Australian share market and the Australian dollar, which finished down about a cent today. So the theme at our end still seems to be money being repatriated overseas. Australian shares are being sold and the money's heading back to Europe or heading back to the United States. I guess it's a bit much for Australian investors to think that with the German share market off about 20% in the last 4 weeks, that German investors wouldn't also be looking to sell their Australian equities. So, yeah, ongoing liquidity theme of money heading back to Europe, I think, is the main driver of the market action today.
Nevertheless, gains quite substantial today. Was it across the board?
Yeah, look, it was across the board. I think there are only two notable stock that were down, Newcrest and Suncorp, and they were only down marginally. So, yeah, there was strength across the board. The energy sector was the strongest, but pretty much everything in the top 50 was up today.
I see Rio Tinto has announced further expansion plans in the Pilbara.
Yeah, look, there's still plenty of commentators who are nervous about the outlook for the global economy, nervous about the outlook for the Australian economy, but the big miners don't seem to be terribly nervous. Rio announcing another $830 million to go into the Pilbara, 500 million of which is going into power generation. So significant ongoing commitment by our big miners into those big infrastructure projects, and obviously they have a much more optimistic view, long-term view for the global economy.
Macquarie Airports has received the green light from European regulators for its asset swap deal. Now, how significant is that?
Oh, look, I think that's fairly important for the shareholders of Macquarie Airports. Once this deal goes through, and presumably will go through, there'll be about 80 cents of cash per share inside Macquarie Airports, which is about $1.5 billion in cash. And the directors of Macquarie Airports have certainly been hinting that that money will find its way back to shareholders. So that's quite a significant return of capital when you consider the current share price is about $3.20. It also means that Macquarie Airports will be a much cleaner vehicle once all this goes through. It'll simply own a single asset, being 85% of Sydney Airport, which is obviously a very good piece of infrastructure in Australia.
Ken Howard, thank you very much for joining us.
Thank you, Tiggy.